Welcome to the latest episode of the War In Today podcast. I'm Jonathan. Hear me out for a second. Tax. Now, it might sound like a dry topic, but it's actually really important. Thailand's rules on taxing foreign sourced income have been one of the most talked about issues among expats in the country over the past couple of years. It's ever since the Revenue Department introduced new rules in January 2024, and there's been a huge amount of discussion online and amongst expat communities. As someone working in the media here in Wohin, I've seen a lot of it firsthand, and unfortunately a lot of what's been circulating is either incomplete, misunderstood, misguided, or just simply wrong. From like scaremongering, alarming headlines on social media, it's left a lot of people confused. The reality, as you'll hear in this episode, is that with a bit of basic planning, most expats have absolutely nothing to worry about, and they're certainly not going to be hit with some unexpected large tax bill. Now, while this isn't tax advice that we're offering, it is some guidance, and we're trying to cut through the noise and get some clear, reliable explanations. In this episode, I'm joined by Janira Sumas, the CEO of the MBMG Group, a professional services firm that advises clients across Thailand on tax, accounting and legal matters. Janira explains what the rules actually say, what they mean in practice for foreign residents in Thailand, and why some of the biggest misunderstandings have taken hold. If you live in Thailand, spend a lot of time here, or are thinking about moving here, this is a conversation well worth understanding. Let's get into it. Welcome to the War In Today podcast. I'm with Janira Sumas, CEO of MBMG Accounting. Welcome back.
Yes.
This is the second time we're talking.
Yes.
For anyone watching or listening to this, we recently recorded a podcast on the recent crackdown, which we explain on nominee shareholders,
right,
and the impact that's having on buying or owning property or land in a company name, how that's affecting people. If you've not seen that episode, go back and watch it. We go into detail on that. I think people find it very informative. Today, we're going to talk about Thailand's changes on income tax, how that affects people. This has been the most talked about topic among expats for about 2 years.
Yes.
I would say. I know there's a lot of podcasts and videos out there already. I wanted to cut through some of that. Personally, I think there's a lot of misconceptions, there's a lot of confusion about that whole issue, and I hope we can clear some of that up today. So finally, thank you for joining us. How are you?
I'm always happy to be here.
Yeah. How are you after the last podcast? You survived?
Yeah, still survive. Got some phone calls. Yeah, I'm glad to know that quite a lot of viewers from our podcast.
Yeah, there's a lot of people
Yeah.
interested in that. I said at the time, this tax issue is a big issue. I think probably the stuff on property and holding it in company name, I think affects a lot of people.
Yes.
And I think that's a serious one, which maybe we could do an update in the future on about why that's become even more serious. Today, we'll talk about tax. Let's dive straight into it. So give me a bit of an overview on what's happened, what's changed.
Okay.
I know some things were announced in like September 2023, I reckon, from my research. It then came into effect on the 1st of Jan 2024.
Yes, correct.
So what did come into effect? What's changed? And what should people know about?
It is the significant change of the foreign source income. In the past, if you have the income from overseas and you don't bring into the country in the same year that you earn, you get tax-free. You don't have to pay tax at all in Thailand. So it's like a loophole.
Yeah, there'll be people living here. And when I'm thinking of like retired expats, a lot of people like that.
So the retired expat, they earn money many years ago, put into their saving, and then they bring the money into Thailand in different year. For example, if you earn money in 2020, and then you bring money into Thailand in the following year, like 2021, that would be tax-free. You don't have to put it into the tax filing here in Thailand. One big change is they don't care when you bring in anymore, right? If you have the income from 1st of January 2024 and you bring the money into Thailand, into your Thai bank account at any time, you're gonna have to pay tax here in Thailand. When I says you're gonna have to pay tax, it means you have to include that income into the tax return form in Thailand. Then you look at the double taxation agreement, if you can use the credit tax or not, and if it is any exemption under the DTA for you to skip that amount of money that you bring in or not.
What exactly is income, though? How is that?
Okay.
How is that determined? So, like
Determined.
someone's pension, for example, that's income?
Yes, it is the income.
And that's taxable?
Yes, it is. So pension, if you have the pension from, it would be a private or the government pension, it will be treated as the income because it's come from the work that you did in the past. Okay, so that's
Even though that work could have been done
yes,
years and years ago before you ever thought of...
right. So they look at when you earn money. Pension is the money that you earn from the work that you done in the past, but you actually get paid. If you get the pension paid after 1st of January 2024, the first check box is yes, you're gonna have to consider if you have to pay tax here or not. Okay, because the line is from 1st of January 2024. But if you says you have your pension, you got the saving from the money that you received before that time, you don't have to worry at all. But you need to have a proof that the money is sitting in your
How would you prove that? Through some kind of statement?
statement. Yes, bank statement, your overseas bank statement.
Okay.
Okay, so that's number one.
Okay. Why is Thailand doing this? Why did it start?
Why did it start?
And it's not just affecting, it's not just foreigners, right? It's anyone.
It's anyone. It's anyone. It's the foreign source income. If a Thai person happens to work in overseas and they get paid by the employee in overseas and they bring the money into Thailand and they are the Thai tax resident living in Thailand for 180 days, they're gonna have to pay tax as well. Okay.
So why do you think Thailand has started this?
Just to be, I think, to comply with the global tax that we try to have the same standard.
It's like modernizing its tax collection.
That's right. That's
Thailand doesn't have many taxpayers, does it? I think
right.
our research...
Any taxpayer?
Yeah, I read that it only has like 10% or something of its... It's quite small compared to... Which isn't uncommon for this part of the world, but compared to other countries, it's quite small. So maybe
yes, especially the personal income tax.
Yeah.
That people don't really care much in the past.
Yeah.
And then a few years ago, the government, the revenue department, tried to focus on those, for example, online sales that people never pay tax. They can just track back from the transaction that they have or even the bank account. If you heard about the bank account, the bank that they're going to have to send the detail of the statement to revenue department, if you have the transaction more than 3,000 in each year.
3,000?
3,000 transactions.
More than 3,000 transactions?
Yes,
okay.
Yes.
Okay.
Imagine if you do the online sales and you have
you're an e-com business. You have a lot of... Okay, I see.
A lot of transactions. So that rule number one, your bank gonna have to send the statement to revenue department so they know exactly how much money you earn in your bank account. Number two, if you have 400 transactions, but the total is reached 2 million baht, they're gonna have to send it to revenue department as well. So doing it this way, it means those e-commerce business, even you're doing in your individual name, is already in the radar of revenue department. So that's how we, revenue department, try to upgrade on tax collection from everyone.
Going back to income then, so what would count as income? So a pension is...
Pensions, yes. Sale of the property, actually the capital gain tax is the income as well.
So if I sold a property in the UK, let's say, and brought that money into Thailand, that's classed as income?
Classed as the income, just only the gain, not the original investment that you put in. Okay, so the gain, if you bring into Thailand, you're gonna have to add it into the Thai tax form.
Okay. Promote your business on the Wahin Today podcast. Email info@wahintoday.com or DM us now. So anybody watching this whose pension, I think pensions are what mainly concerns people here.
Yes, yes.
Just given the demographic of
That's
expat.
right.
Is a
So
lot of
when we talk
retirees.
about pension, this one is like a general pension will be treated as the income that you have to include into your personal income tax filing. But you're gonna have to look at the DTA because Thailand have got
DTA, what's a DTA?
DTA is Double Taxation Agreement.
Okay.
Okay, Double Taxation Agreement is just to identify who should pay tax and where the tax should be collected.
So if I've already paid tax on my pension in the UK, are you telling me I've got to pay tax again here or no?
Okay, so we look at the DTA between Thai and UK. In DTA, it's gonna specify who will have the right to collect tax. For example, if they says tax can only be collected by UK, it means UK already got the tax payment from you. It is possible that we don't have to include the amount that you bring into Thailand into the calculation at all. Or if we put it into the calculation, we can use the tax that you pay in UK as the credit tax to offset with tax that you have to pay here.
And does Thailand have, how do DTAs work? Because every country have a DTA.
Not every country, I think it's 100 something.
Okay, so most you would
Most,
say. Okay.
most. For example, we have got the customer that they have got a pension from the US, from Swiss, and from France. The DTA with America, you don't have to include that into the tax form here. Okay, it's like 100% exemption.
Okay.
Any money that you bring into the country from the US government pension is tax free here. You don't have to include it.
So if you're a US national, that would cover
that would
cover you.
That's
Would that mean that a lot of US nationals then aren't necessarily affected by this because of the DTA?
Yes, then you need to look at the types of the pension. If you look at the DTA, you're gonna see different clauses in DTA specify each category of the income, like types of income, both for the business and individual. So you go to the right part, and for the pension, normally it will be separated into two parts, either government pension or private pension. And then
does Thailand differentiate between those two things? Was it right?
So DTA is very important. You need to talk to your consultant who knows about DTA and familiar with that. Yeah, because like when you read the agreement, then you have to translate. And then the important part of the DTA is to eliminate the double tax payment. Like you says, if you already pay tax in the UK, we see if DTA says that we can use the tax that you pay in the UK as the credit tax or not. If yes, it means you do the tax calculation here, and then the bottom line gonna show the amount that you have to pay here in Thailand. Then we see how much you pay in the UK. We use that to offset, and you just pay the difference. If the tax that you pay in the UK is higher, so you don't have to pay tax here in Thailand.
Okay.
That's how the DTA works.
Oh, I see. Okay.
But
so that would also cover a lot of people.
It's cover a lot, but you need to look at it by each country because in each DTA they have different terms and conditions. Okay.
Yeah. Okay. You mentioned before about 180 days.
Right.
Why is that? Why is that important?
So you need to know if you are the tax resident or non-tax resident. In Thailand, we counted 180 days. If you stay in the country for 180 days in one calendar year, from January until 31st December, you'll become a Thai tax resident.
What about if you stay 179 days, leave, and come back later in the year?
You're not qualified as a Thai tax resident.
Okay, but what if you stay here for 179 days, you leave, go and have a month or so elsewhere, come back for another 50 days?
In the same year?
Yeah.
It will be counted continue counting from
So it's
150.
continuous.
Yes,
Right? It's continuous in a calendar year, is what
so
you're saying.
179 plus 50. You're more than.
So he's not doing a visa run where it reacts.
No. It's unlike the 90 days visa run. Then when you come back, you start counting number one.
Okay. It's
This one is continuous.
And what is the tax year in Thailand?
Tax year in Thailand is from 1st of January until 31st December.
Oh, the same as the calendar year?
Yes, the same as calendar year.
Okay.
So if you're not a Thai tax resident, you don't have to worry about the money that you bring in. You don't have to pay tax at all. So that could be one kind of tax planning that you plan properly about the tax resident. So it will be three things together to look at and say if you have to pay tax or not. The first one is the income earned from 1st of January 2024. Okay? If you got that one, then we go to look at the second one. If you are a Thai tax resident or not, you stay in the country for 180 days or not in one calendar year. And then number 3, you bring the money into Thailand or not. So those 3 things. If you got a tick marks on those 3 things, it means you can have to do the personal income tax filing here in Thailand. And the way to work on it is you just take out from your bank statement the whole amount of money that you transfer in, and you break it into each part of the pension. For example, if you have pension from different country, you put it into 2-3 countries. Then we look at the DTA of each country to see if you have to include it into the tax computation or not.
Is there a certain amount you can bring in without paying tax? Is there like a threshold or after a certain amount? I'm thinking of people who will bring money in every month as like a pension to satisfy their visa requirements, right? A lot of retirees on retirement extensions will bring in the 65K a month. Is there up to a certain level that they don't need to pay tax?
Personal income tax is 0 from 35%. If your net income is lower than 150,000 baht, it would be tax-free. That would be 0. And then
In the year?
Yes, in the year, in the calendar year. When I say net income, it means you have got the accessible income. And then you take out all the deductions and allowance. For example, family, life insurance, investment, donation. So you get the net income for tax computation.
Okay.
If it is lower than 150,000 baht, it would be 0%. It means tax-free. And then it's go up as the progressive rate up to 35%.
Okay.
If you have 1 million baht net income, it would be like 25%. If you reach 5 million baht, it's go to the highest rate, 35%.
We talked about pensions. What about stuff? I'm just thinking off the top of my head, but what about like dividends from stocks and shares, or so that's taxable as well, is it?
It is taxable as well, but you need to look at DTA. Normally, when you DTA, normally the dividend or interest, if you already pay tax, it will be treated as a final tax. Final tax means you don't have to include it into the year-end calculation.
Okay.
You just pay tax at the source of when they pay, and that's it. Right?
Okay.
Like when you invest in Thai company, and you have got the dividend paid by Thai company, they will take out 10% withholding tax, sent to revenue department when they pay you. You don't have to include that amount of dividend into your year-end tax filing. Okay, that's the final tax.
Okay.
Same as when you sell the property and you pay tax at the land office, you treat it as a final tax.
Okay.
Okay. Right.
What's the difference between, I mean, we have touched on it then, but like income and savings, how does Thailand define those, and how does it apply to paying tax?
Okay. Savings, if you have the saving before 1st of January 2024, you have that amount shown in your bank statement already. So you can prove it's actually my saving before 1st of January 2024.
And
even you bring the saving in, you don't have to pay tax.
Okay.
Right?
So a pension, if you could show that amount was if you could get a statement that showed before the 1st of Jan 2024, you're not paying tax on that.
Absolutely, you're not.
Okay.
But normally pension you get pay out every month
Yeah,
or
right,
every year.
right.
Mhm.
Yeah.
So
Okay.
if you got a pension paid from the year before 2023 and you never bring into the country, it's sitting in your bank account in overseas, and you bring in later, then you prove that it is my pension, but I got it, I received it before that time. It would be tax free.
Okay.
Okay.
Okay. What are some of the things that you're seeing ever since this was announced? And I remember the first seminar I attended of yours, you did in the tax talk, right?
Yes.
There were a lot of people there, like
Mm, 200.
confused, had questions, and that just replicated what I'd seen posted online in the Facebook groups and stuff. A lot of people. What are some of the biggest concerns or questions that people have been coming to you and asking about this issue?
Yes, the question that you just asked about pension,
Oh,
because most of them live in from their pensions.
yeah.
And the second one is the tax planning. At the seminar, we talk about giving a gift to your spouse.
Right.
So if you transfer money to your spouse bank account, it could be a spouse or legitimate children and parents. You can transfer to them 20 million baht a year, tax free. It
Right.
will get the tax exemption. So we got
Well, that
a lot.
must cover nearly everyone. It's really. I mean, let's be honest.
So that area we got asked a lot to check, is it real? How can we do it? How can we?
A gift, like you say, a gift.
gift.
Like what does that look like in real terms? So that's someone transferring the gift
Mm-hmm.
into their wife's bank account,
Right.
let's say,
Right.
up to 20 million baht.
Okay. So you have money in your overseas bank account.
Yeah.
You transfer it to your Thai wife bank account, 20 million baht for her to spend, do whatever for herself. That's a gift. Okay? It would be tax free. But if you transfer money from your overseas bank account to her Thai bank account, then she purchased buy a car under your name. It's not a gift.
Oh, I see.
It's actually the money for yourself, but you just use her bank account. So you have to make sure that you transfer to her for her own spending.
Okay.
Okay?
Okay. Is the gift in a one-off transaction, or could it be a monthly gift?
It can be a monthly gift up to 20 million baht a year.
Promote your business on the Wahin Today podcast. Email info@wahintoday.com or DM us now. So
it's quite usual that you're gonna have.
I'm not saying people do this, but what's to stop someone transferring 200,000 baht a month, let's say,
Mhm.
into their wife's bank account, and then she just transfers it straight back into John Smith's account? Like, what's
If she ever get check, I mean, if
That would
somebody
look
just
suspicious, right?
if somebody just send her bank statement to revenue department, so the bank statement gonna show that she got money transfer from overseas 200,000, and then every month, even the next day, she transfer out straight away. So she gonna get asked, and when she transfer it to her husband,
Yeah, that's obviously not a gift thing.
yes, okay.
Okay.
So gift is a gift.
Okay.
Have to send it to her for her to spend.
But even
For
still,
herself.
an annual transfer, I mean, let's be honest, an annual transfer of up to 20 million,
Mm-hmm.
I think that covers most people
Yes.
in this issue,
Yes.
really.
Yes.
I mean, you're not doing anything wrong there.
No, you're not doing
that's-
anything wrong. No.
You know,
You just need to make sure that she gonna.
right? Like,
You just need to make sure that she gonna spend that money with you.
yeah. Yeah, well, that's for a different podcast. Go to it.
You know, it might cost more than paying tax.
Oh, right. Yeah.
Right?
Yeah. Okay. You might have a bigger problem there in tax. Yeah.
So take everything into the consideration and then pick the right way,
Yeah.
the best way.
Yeah, for sure. But at the start of this podcast and leading for the last 2 years, like I said, this has been probably the most talked about issue. And I've seen a lot of, I think, not misinformation, but I've seen a lot from the media side, right? I look at what media do and how they report this issue. And I think there was a lot of things put out that people were more focused on getting visitors to their website as opposed to putting out clear and decent information, really. What about a tax ID number?
Yes, tax
Does everyone need a tax ID number?
If you're not a Thai tax resident, you don't need to have an ID number.
Okay.
Okay? So you look at your visa and see your passport and see if you stay in the country for 180 days or not. If the answer is yes, you should apply for a Thai tax ID.
And what if you don't?
If you don't,
You know, I'm
You
thinking
don't-
there's
you don't-
probably people here that have lived in Thailand, Wahin, for 10, 15 years, lived on the pension, happily going about their life. No one's ever asked them
No,
about tax,
right.
never even mentioned the word to them.
right.
I mean, would they go,
I
would you put your, my thinking is, if they go and get a tax ID number, you're kind of in the system then.
mm-hmm.
Then people expect you to file tax returns and
Look-
all the rest of it. If you don't have a tax ID number,
Okay.
is this good advice? Should I be saying this? Like, you tell me. If you don't have a tax ID number, if no one's coming asking you about tax,
Right.
why are you volunteering that
Okay.
information? If you're like the retired
That's a
expat
good
guy,
That's a good point. If nobody ever asks for your tax ID, you'll be fine. But you know who always asks for your tax ID or asks you the question, where's your tax resident?
I don't know.
Your bank.
Okay, do that. Do they?
Yes,
Okay.
yes. Last time we talked a little bit about common reporting standard, right? Common reporting standard is just the bank gonna have to send the information of their customer back to the tax resident country of that customer. It's just drawn by OECD.
Right. Okay. Oh, wait, OECD, which is
OECD is the Organization of Economy Cooperation Development.
okay.
So they become like a center of the business. This is something that they try to put every country into the same tax rate or the standard at least.
Yeah, it's like a global standard.
Yes, it's like a
right? Yeah.
global standard. One thing that they came up is the common reporting standard. Common reporting standard, they're gonna have to focus on two things. One, where's your tax resident of your customer? I mean, the bank gonna have to find out. Imagine if the bank asks you, and we got the customer who have got the questionnaire from their bank every year.
Oh, you have had that, have you?
Yes.
So banks in Thailand are contacting their
Bank in
customers,
Thailand,
asking
yes.
where.
Yes, they
Right.
ask as
Okay.
well.
Okay.
This is the reason that somebody got their bank statement frozen because they cannot answer where your tax resident is.
And you're a tax resident, as you said before, if you're in this country 180 days.
Yes. And if you says that you're a Thai tax resident, they're gonna ask for the copy of your tax number, tax ID.
Okay. Then if okay.
Like you says, if nobody asks, that's fine. But if somebody asks and you cannot say where your tax resident is, imagine what happened. They put your bank account on hold for a while, freezing, until you can answer the question.
And how would somebody get a tax ID number?
Okay, if you get a Thai tax ID number, it means you are the Thai tax resident. The bank then will have to send the information back to Thailand. When I says we'll have to send, they're gonna send it on request only.
Okay.
It's not like a regular sending. If Thai Revenue Department has got any question or suspicious about your bank statement, they can contact your bank to get the information. So that becomes like the agreement between banks and Revenue Department of each country.
Okay.
That's the common reporting standard.
And why might a bank or why might a foreigner suddenly be asked for, like, to prove where they're is it
Why the bank asks?
Yeah, like if you're just a retired guy here living off his pension.
Because they already signed the common reporting standard.
Okay.
They want to know, they want to know where you are.
So if you get flagged up on some check, then
That's right.
that's where you can
That's
say.
right. That's right.
But of course it might not, right? You might
Might
never
not.
get.
Yes, if you're lucky enough. Okay.
Yeah, fair.
This is why you need to look at different points of view, because it's not just Revenue Department anymore. It's some other organization that they want to do all of those inspections as well.
Yeah, and like you said before, Thailand, it seems, is trying to like get to a global standard for its accounting, and that's where this comes from, right?
That's right.
Okay. What about if you're not in this world we live in? What about if you're not a tax resident anywhere, or
That's okay.
online? People are doing stuff online, and you're moving about. It's not inconceivable.
Okay.
It's not impossible that someone.
It's not impossible that someone they travel a lot.
Yeah, right.
Then you look at the next question. They're gonna ask, have you ever paid tax? Answer gonna be yes. Where do you pay tax?
Promote your business on the Wahin Today podcast. Email info@wahintoday.com or DM us now.
Where do you pay tax? So in the country that you pay tax, you should get the tax ID number.
Oh, right.
Right?
So it's
Do
somewhere.
you know that you can be a tax resident of Dubai, being there just only one day.
Oh, right.
That's why it's become the country that
Yeah, of
people
course.
like
Yeah.
to stay or even
Oh, I
have
see.
the paperwork.
Okay.
Okay.
So then you could be a tax resident of a country which doesn't charge you very much tax, and that would satisfy.
You look like
Okay.
if you travel a lot, if you have different places of the business or where you live, then you go to talk to the tax advisor to do the comparison of the income that you have and then figure out which country give you the best rate of tax payment. To me, you're supposed to pay tax somewhere.
Mm.
All right? Cannot just say that I'm not a tax resident of any country. I never pay tax. I don't have any income.
Yeah, you need to be paying it somewhere, right?
Yes.
Even if it's not very much somewhere.
Right.
It needs to be somewhere.
Right. Just to keep everybody happy and leave you alone. Okay? Just leave me alone.
What would be if somebody sat here watching this thinking like, what should I do? Let's say a pensioner, what advice have you been giving to your clients from that initial first conversation to
yes.
explain like some of the steps that
Right.
are involved?
So the first step is my first question is, are you a Thai tax resident? How many days you stay in the country? 180 days. First thing is try to get in the Thai tax ID, okay? The second one is
And they could do that just by walking in like their local tax office probably and saying, can you give me a tax?
you take your passport and you take the proof of residence. Yes, the resident certificate
And
issued by the
copies of each. Call the rest of it.
issued by the immigration. And the lease contract that you have.
Okay.
And if you own the house, you just send them the proof of the document that you are the owner of the house. If you put your name into the house registration, so you're gonna get the yellow book.
Right.
You take a copy of your name there.
Yeah.
That can be a real good proof of your address.
Most foreigners will be familiar with that kind of stuff, yeah.
So you can just walk in, get the tax ID. Once you have the tax ID, then we look at the money that you transfer into the country. You look at your bank statement and then list out the money transfer. You know that it's gonna show different code when you transfer the money into Thailand from overseas and when you deposit money here in Thailand. So you just look at the amount of money that you transfer in. You list it out and then you figure out from it's come from your 1st of January 24 or not. If it after that, you will have to take into the consideration for the tax filing. If anything before that period of time, you don't have to worry about.
Okay.
Okay? Then you look at the DTA. If there's anything that you can get the exemption under the DTA or not. Exemption, it will be two ways. One, you don't have to take it into the tax computation at all. The second one, you put the figure in, but you use the tax that you pay in that country as the credit to offset. It is possible that you don't have to pay tax in Thailand at all because the highest tax rate here in Thailand is 35%.
Yeah.
How much is in the UK?
I don't know.
Yeah.
But
if it's
yeah.
more than that, it's possible that you don't have to pay tax. Mm-hmm. But you cannot get a refund here in Thailand, right?
Yeah, right. Okay. I'm going back again thinking like the retired guy there'd be some guys living here on like, I don't know, probably 50,000 a month. It's quite a small pension, really, in the grand scheme of things. Or let's say 65 a month. Like this might be a silly question, but like, how much tax is Thailand gonna approximately?
Okay.
How much could they possibly pay in, let's say, 65,000 a month
65,000 a
pension?
month pension. Then you have to deduct your, they let you deduct the personal expenses. I mean, personal deduction. If your age is more than 65, you can take out 190,000 and then you take out all of the allowance. If you have the health insurance here in Thailand, you take that as the deduction as well. If you have the investment, again, in Thailand. If you have spouse who doesn't have any income, if you have kids that you can take out as well, then it will leave you the net,
Not much.
not much.
If you take
All those
like
deduction, and if you still have too much, you can do like a donation to school or even the temple. But with the donation, try to do it online, like the QR code, because everything will go directly to.
They don't just put some cash in a box.
Don't put the cash in box. Don't put the cash in the box or get a receipt in the paper.
Okay.
It might not be the real one.
Okay.
Because sometimes the people do the donation to the charity, and when we check with revenue department, it's not a real charity that register for tax exemption with revenue department. You're gonna have to check that. So.
Oh right. That's a good.
So that's that. Yes, that's the donation
That's a good
that you can
tip
deduct.
generally when people
Yes,
donate to charities.
it is, and you just use the bottom line as the net income for.
So from, let's say, from your 65K a month pension,
If you don't have any deduction at all, put it this way, okay? Just deduct for yourself. You're gonna pay tax around 10%.
okay.
That's it.
But then again, there are so many things that you can deduct by the sounds of it,
Yes.
like you just said, that covers personal, your insurance, if your partner has no income, if you've got kids, if you've got an investment, if you're donating to a charity. By the time you've got, it could be even less, right?
Absolutely.
Okay. And I understand people don't want to pay tax. I'm not saying people want to break the law, but no one in the world wants tax coming out of their salary, right? I'm
Even
saying,
yourself.
yeah, right. But I'm just thinking, to all the noise that's been around this, once you get the right information, I think it's
important for you to get the right information.
and it not worry. I remember coming to that first seminar, and that, like I said, you did that. When did you do that? That tax talk seminar in what? 25, 24?
24. We did it in August 24, I think, because that become the first year.
Yeah.
When the law is changed, it means you're gonna have to file in 25.
When you did that seminar, you were the first person I think I'd ever heard really talking about this stuff with any kind of, we said in the previous podcast, obviously you're not from the government or anything, and it's not you making these rules, absolutely not. But foreigners had not had that much clear information from anyone, really.
If you can recall, we have the last session for Q&A.
Yeah. There was a lot of panicked people there, and that's my point with this. Is like, once you sit down and
it's
get the
almost 1
information.
hour when people.
Yeah, it was almost as long as the actual seminar. Really, yeah.
Oh.
Yeah.
So, yeah, it's a lot of question asked at that time, and with misunderstanding, with miscommunication.
Yeah, very much so. Yeah.
And sometimes they get only halfway through the whole information that they're supposed to get. Like when we walk you through the DTA, we're not just jumping into the DTA. It's gonna have to be step by step.
Yeah.
Yeah. DTA is like the supplemental agreement. So before you go to the DTA, you need to look at all of the standard first, right? If you don't have to pay tax from the first step, what's the point of you jumping into the DTA?
Yeah, right.
People keep talking about DTA, but before you go to that second stage, you just
might not even need to get there. Okay.
For example, like you says, people living with 50,000 baht a month that they bring into the country, and they have got all of those deductions and allowance. If the bottom line just show 150,000 baht left, there's no tax at all.
Yeah.
It becomes
Yeah,
zero.
you don't even need to consider the DTA in that case.
Absolutely.
Okay, I understand.
Absolutely.
What about other things that I'm jumping back to what is income? What about like inheritance? If you had an inheritance from overseas, or is that taxable? Would that be considered income?
Inheritance, you definitely need to look at the DTA.
Okay.
Right? It is the income, inheritance. If you bring into the country, if you don't bring it, fine.
Okay.
Okay.
Okay. I see. Well, what about other things? What about things like I don't know. In other countries, let's say gambling is legal in other countries.
Yes.
Let's say you go to Hong Kong,
Income.
you win big on the casino in Hong
Income.
Kong. Yeah.
Income. Do you know why it's income?
Don't know.
Because that casino have to book it as the expenses when they pay you the money. When the other side book it as the expenses, it has to become income of the other side.
Right.
Like when you come to Hua Hin Accounting, we collect our service fee from your company. So your company book it as the expenses.
Oh, I see.
That will become income of Hua Hin Accounting.
Oh, I see.
If Hua Hin Accounting come to this studio and we pay the service fee for them, we'll book it as the expenses of Hua Hin Accounting.
Okay.
It will become the income of this studio.
Okay.
So
I see. Okay.
this is something that they can always track back.
Okay.
Okay.
We talked about like what if somebody sells a house, but what about like if you sell your business in the UK or something and bring that money in? Is that
Again,
still
just on the capital gain.
okay?
If you have the company and you have the investment of, let's say, $1 million, and then when you sell it at 1.2, only 200 on the gain. That will
Okay.
take into the consideration. But it doesn't mean it has to be the whole 200. Because when you sell the business is sitting outside Thailand. The capital gain tax have to be paid in that country.
Mm.
Depends if that country will collect the capital gain tax or not. You will only pay tax in Thailand if you bring the money in. And if you don't bring the whole 200,000 into Thailand, you just take into the calculation of the amount that you bring in.
But then if you've already paid tax in that country, isn't that then where the
Then we look
DTA
at the
comes in?
DTA. Yes.
Okay.
Yeah,
Okay, I see.
absolutely.
Okay. Oh, what about if you, let's say, you run a business in the UK, live in Thailand, and every quarter are paying yourself a dividend or something like that? Is that the same? Is that
Is
still
it the income?
that's still income and that's taxable
Right.
unless you've already paid? And then you look at a DTA.
Yes.
Okay. See, the more we're talking,
It's not that hard.
not really. I mean, if I can understand it, Christ, it's not that difficult.
No, it's not that difficult. So you look at
Well, it's not that it's not that difficult from my point of view, and I think from other expats' point of view. When there was all, like I said, all this noise about this, it was like, oh my God, I'm going to be paying tax on everything. But actually, there's a lot of ways, maybe ways is the wrong word, but there's a lot of instances here where you probably don't need to pay tax on all your income. I'm not saying you avoid it, but I mean, you're already covered. You've already paid it somewhere
we
else.
call it tax planning.
Right.
You know, it's not tax avoidance.
Yeah, it's tax avoidance. Yeah.
Tax avoidance is wrong. Tax planning is what people always do.
Yeah.
Even for myself.
Right. Yeah.
We go back to talk about gift. The 20 million baht per year is for somebody in your family. Family means spouse.
And is it only
children?
family? Could it not gift?
Only spouse, children,
Could it not
and
gift
your
a friend,
parents.
non-married?
If you give to friend, you can have up to 10 million baht.
Still, 10 million.
Still,
And
if you
is
have
that
a girlfriend,
And
if
you're
you
not
have
married,
you're not married, you can transfer to her bank account.
10 million
10
in a
million.
calendar year, in a tax year, and
Right.
it's tax-free.
Right.
And you can do that every year
Yes. Make sure that she's gonna return somehow.
and make sure it's a gift, right?
Yes. And make sure it's a gift.
Okay. That it's not just then transferred straight back into your account. Okay.
No.
And that person, let's say the girlfriend or the partner, unmarried, that can only be a Thai national, or could you transfer it to another foreigner in Thailand?
And other foreigner can be anybody.
Okay.
Okay. We're not talking about the nationality at all.
Yeah, that's not relevant. in
No,
that
it's
case.
not
Okay.
relevant.
Okay. Okay. Okay.
So that could be something that you can handle.
Yeah, I'd be more.
What I would always suggest is transfer directly from your bank account in overseas to her bank account here in Thailand. If you have a wife, for some case, they transfer. So the husband transferred to his wife bank account in overseas, and then the wife transferred to Thai bank account, her Thai bank account. When revenue department see, they will just only see when the money come into the country. It will show the same name.
Okay.
So they will assume that it is her own money.
She's just transferring it to herself.
She
in
should,
effect.
if the money transfer from different names, from the husband to her, it's easy to declare
Okay.
as a gift.
Okay.
Unlike when she transferred from her bank account from overseas into her Thai bank account. So that's the same name. Then she can have to defend why is this the gift when the transfer just show the same person.
Okay.
Okay.
That makes sense. Yeah. Okay. How do before we wrap this up, but how does somebody, if they have to pay tax, how do they do that? Like, what's the process of like submitting a tax return,
Okay.
or how would just some expat living somewhere, how can they do that?
We have the online system that you can do it online by yourself as long as you can read Thai.
I was gonna say, yeah, is that in English?
They don't have it in English yet.
Is this the e-filing?
As it is e-filing, you can go to the revenue department website and you go to my tax column and you have the e-filing there.
So e-filing is like the online system to submit.
Yes.
I know the revenue department have introduced that. They made a big thing about publicizing that actually for
Right.
yeah.
But they haven't done it in English yet.
Yeah, right. So it's not any.
So you may still need to have the accountant do it for you. It will be 3 different forms that you should use for personal income tax filing. We call it PND 91 for somebody who has got the salary here in
Yeah,
Thailand
I'm
from
familiar with that.
Oh, you're familiar with
Yeah,
that.
yeah.
So the withholding tax that your company deducted from your salary every month, they send it to revenue department under PND 1. That's the withholding tax. So everything that you got deduct every month, you put it into PND 91
Okay.
when you do your year-end tax filing.
Oh, so what about like in my case, my company, the company I work for, Wahin today, right? And somebody there does this for me, so I've not got to really worry about.
Right.
Got to worry about that,
Right.
right? It's just taken care of, and okay.
Some company they do it for their employee, especially when you're a foreigner,
You're right.
because they're gonna need to have all of this document for your visa and work permit renewal.
Okay, yeah.
They have to send out the PND 1 to show that they deduct tax from you and other employees every month.
Okay.
They will have to send the Social Security Fund form that they put the contribution every month. And they need to show the year-end personal income tax filing as well. So instead of having you doing it by yourself, they handle it for you to make sure that they have everything in place for your visa renewal. But in fact, it will become your responsibility to do it if the company don't do it for you. Okay, so that's PND 91 for somebody who has got a salary. If you have other types of income, then you file the PND 90. For the income, we separate into 8 types together. So you see which one that you fall into. And if you're under number 5 up to 8, you have to file the mid-year tax as well. It is PND 94.
So
For example, if you have
not
rental
enough.
income.
We've got to do it twice. You're telling me. I've just been telling how clear this is, and now you're hitting me with twice. Why would somebody have to do it? Does that apply to like a retired expat, let's say?
No.
No.
No. If you have the house here in Thailand, even you are not a Thai tax resident, even you don't stay in the country for 180 days, but you have the property here in Thailand and the source of income is here in Thailand, you get rental income, you have to pay tax from that rental income.
So if your business was renting out properties, is that what you're saying? Then you have to pay the mid-year tax
Year
for that.
tax.
Okay.
So you do the PND 94 mid-year tax, and then you do PND 90 year-end tax.
Okay.
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 That's, we call it source of fund rule.
Right.
So they don't look at the 180 days. They look at where you generate the income from. If the income you get from work performed in Thailand or any business conducted here in Thailand, from the property here in Thailand, you're gonna have to pay tax here.
Right. Okay. Finally, then, so what should expats in Thailand do with regards to to regards to their tax situation? If I came to you, if I just watched this and I contact Wahin Accounting or MBMG Group and say, I want to begin tax planning, let's say, like you said, like I get a pension, 100,000 baht a month pension. Where do I go from here?
Yeah.
Like, what kind of advice would you give them?
We got the inquiries, they send us the brief information. We then set up the appointment just to understand your situation.
Everyone's situation is different, right? As well, that's what further complicates this.
Even the pension, when you have got the pension from different country, is under the different rule of DTA. Or even you get the pension in the same country, but it is the government and private pension.
Yeah, that must be quite common in expat circles, because you could have someone retiring who spent 10 years working in Hong Kong. Before that, they were in Saudi Arabia, and before that, Australia, and they could have all these different pensions, let's say. That must be quite a thing.
I just got one customer who got pension from 3 countries.
Okay.
And we have to file the PIT for him.
Okay.
So the first thing is, when they come to us, when they send us the inquiry, we gonna request the detail of the source of fund to find out if you're the Thai tax resident or not, and then look if you have to do the tax filing. If you already stay here for 180 days, we always recommend you to get a Thai tax ID.
Okay, you would recommend that.
I would recommend that. And I think the rule is you need to get it within 60 days after your 180 days. Otherwise, it's going to be a penalty. I think it's 200 baht. It's not much.
Okay.
But that's how you should do. We provide the consulting before we do your tax filing. So that would be a small fee of the advisory service, like half an hour, 1 hour for us to have a meeting, even at our office or online meeting or email, telephone. Then we figure out if you need to do the annual tax returns or not. Then it would be a separate service to do the Thai tax ID for you. If you like to do it by yourself, as you said, just take off those documents, go to Revenue Department, apply for the Thai tax ID. Once you have the tax ID, you give us the number, then we can fill in the form.
How long does it take to get a tax ID? Is it an instant, one day?
Just 1 day.
Okay.
Just 1 day. And for the filing, you can do it manually, like paperwork, or you do it online. If you do it manually, the deadline will be 31st of March this month. And this is why we're talking about this today, because it's almost the deadline for you to do the filing. If you do it online, you have another 8-day extension. So the deadline will be on the 8th of April.
Okay.
But don't wait until the last day,
Yeah.
The computerization might be cracked down.
Yeah. Are you, 2 more questions have popped into my head. Are you, all this, a lot of foreigners were worried about if they didn't pay tax, that when they came to renew their visas, immigration would say, you can't because you've not paid tax. Are those departments linked in any way? Do you know?
Good news about Thailand is the authority, the government agency, they try to link the information. For example, DBD and Revenue Department. In the past, we're gonna have to submit the financial statement to both of them. But now we just do it with DBD, and revenue department just pull the information out from DBD.
Okay, so
yes.
DBD, which we talked about in the last episode, which is the Department of Business Development.
Correct.
That's now linked to the Revenue
Correct.
Department.
This is the example that the information now get exchanged between the authorities.
And the Revenue Department and Immigration?
Hopefully it's gonna happen soon to get rid of all those paperwork that you're gonna have to sign and submit every time when you do your visa renewal.
But at the time of recording, it's not. I know haven't the police, this is a different topic, but the police and the Department of Land Transport, they're trying to link those systems, right? They might have already done it, I don't know, but I know they're at least trying to for driving offences and police enforcement. So you can see that that's going on in other areas of Thailand, that systems are being linked. But I didn't realise that DBD and Revenue Department
That's our plan.
That must make things easier for you guys, right?
Yes.
Because
when I'm saying
you would imagine they work closely together, the DBD and Revenue, yeah.
when I'm saying good news, good news and bad news. Good news for us, that is make our life a lot easier with all of those e-filing, digital accounting, e-filing, and the PIT is quite simple, that you go into Revenue Department website and then you just fill in the number from each box and they do the automatic calculation.
Yeah, so from your point of view, is it like this e-filing and online system, is it quite easy to use?
It is.
Is it an improvement on what happened in the past that was maybe all manual, and is it easier than that, do you think?
It's a lot easier.
Yeah.
Who in accounting, we do the digital transform right after COVID. COVID helped us a lot, We have got a plan before that, but it never been success. But since COVID, because we have everybody work online, the government...
You're almost forced to use the online.
Yes, you're forced. And the government improved their system as well. We changed from the traditional accounting software that we use to the digital software. We do everything online. Our life is
a bit easier.
A lot easier.
Yeah. Do you know of any foreigners who've got in trouble or had any penalties about not paying tax? And what are penalties for not paying tax?
Penalty for not paying tax.
I guess it depends on the amount.
Yeah, it depends on the amount. So they'll take the number from your bank statement, and the first thing they'll do is assume that everything that deposit in your bank statement is your income.
Okay.
It will be your job to make them believe that it's not our income.
Okay.
So that will become a starting figure that they have. Then you use all of those deduction allowance. It will leave you the bottom line for tax payments from 0 to 35%. It depends what the net income is. And they're going to charge you 1.5% per month. Interest charge for late filing.
Is there in Thailand, is it the possibility of like jail, or is it that serious? I mean, it'd have to be real. I guess they're not sending someone to jail for not paying tax on a 65,000 baht a month pension. No. Let's be honest, they're not.
No. You can always do like a settlement agreement that you put into
last resort, I guess, and the sums would have to be huge, I would expect.
But you just put it into the installment payment at the amount that you can afford in each month.
I see.
Yeah.
Okay.
Not bad, huh?
Not so bad.
No.
This whole thing, I don't think, is as complicated.
Yes, as you said from the beginning. People need to understand. You need to get the right information, and whoever holds your hand need to know exactly what should be done.
Yeah.
Right.
Yeah.
So make sure that you're in good hands. Put it this way.
Yeah, for sure. That's good advice. Yeah. I don't think I've got anything to add, unless you have. Is there anything we've not talked about here?
We do talk about bank account, everything. I think that's pretty much everything, huh? But if anybody have got a question, I'm happy to answer.
Yeah, and I think we will. Of the episode we did about nominee and holding property and land in company name, I think we'll have questions about that. So I think a future episode would be I'll put like a call to action out on the website and stuff, and I'll ask people for questions,
Right.
and maybe we could just go through them and ask.
Yeah, we can go through the question,
Yeah,
or
we do that in a few months.
yeah, or even we can go through the form that they get from DPD, each question that they ask, and
Yeah,
as
right.
as
That'd be
as I updated you last time about the letter from police.
yeah.
The
Yeah,
bad
we'll do a
news,
separate
yeah,
podcast
the
on
bad
that.
news is somebody in Prachuap already got that letter from
Yeah.
police, huh? We
Okay.
heard about that.
Okay, so for people to understand what we're talking about, I suggest you go back and watch if you've not already done so, watch the episode on nominees and
First.
processing a company
Yeah.
name, and then maybe in a couple of weeks you'll see another part 2 of that.
Right.
And
If
then,
you couldn't sleep, just
yeah, sleepless nights. So we're not trying to do that to people. The whole point of this is that I'm trying to kind of be informative rather than like
absolutely.
scare and panic people.
Absolutely.
That's something at Wine Today in particular.
We are not the government. We are not revenue department. We
Yeah.
are not land office. We are not immigration. So all we are doing now is just give the information
Yeah.
as much as possible.
I can tell one thing about just being an expat and working in media and working with when any announcements are always made. Again, it's not a criticism, it's just an observation, and people can disagree with it, that's fine, but it's always like there's an announcement made, there's always loads of noise, people are like, oh my God. My advice to anyone in that situation, just wait,
Yeah.
just let things settle
wait.
down, and when, that can be about anything, but for
Calm
expats
down.
in time, just
calm down.
just relax, just give a bit of time, and then like you say, try and find the information that's
Yeah, and
That's-
it's a lot of good things happening. Like last time we talked about long-term visa, long-term retirement, the LTR, long-term resident visa. If you are under the LTR, under the wealthy global citizen, under the pensioner, or work from Thailand, you'll get the tax exemption straight away.
right.
No matter how much money you bring into the country.
Okay, yeah, that's
Just we want to have that group of people come to Thailand,
Yeah,
spend.
that-
And if you are the high skill professional, as you work in a big company, your tax is capped at 17% instead of 35%. It's a good offer,
Yeah.
isn't it?
Yeah, it's important to say with all this stuff, and we mentioned it in the company, the property podcast we did, is that Thailand's not like anti-business or anti-investment or
Not at all.
anti-foreign. Not at all.
Oh,
Not at all. If anything, I can say in my like 15 years here, it is the difference is like night and day now for how it used to be to the different options that people have, and there's probably more expats, I think, moving to Thailand now, or people, becoming expats. There's probably more foreigners buying property here than there's ever been, I would say. And I would guess there's probably more foreigners opening businesses here as well than there's ever been. And the reason for that is that there's so many more channels now in which can facilitate that. So it's not like Thailand's anti anything.
Exactly.
It's just that rules are changing, and it's important to be up to date with what's going on, right? And that's what we're trying to do.
Absolutely. It's just the law is, when you say the law is changed, yes, it is.
So probably not even. That's probably not correct. Yeah,
It's not the law changed. It might be a little bit of amendment,
Updated.
updated.
Yeah.
You just need to be aware of, stay updated, and
Yeah.
and as you says, don't be in a panic.
Yeah. Don't believe every comment you read in a Facebook group or on a YouTube video. Or,
Yeah, send us what you need to know, and I'll find out the information. Then we can just give out the information.
Yeah. I think that's a good place to end. Before we end, how can people contact you? Where can they find you? I know you've got an office in Wahin. Where is that? How can they
You
contact
can
you?
just come to see us. We are at Rocker Condominium opposite Bangkok Hospital on the main road. Very easy to find. You'll see a big sign of Hua Hin Accounting at MBMG.
Online, how can they get you?
Online, you can just contact us at
On
yes, on the website is mbmg-group.com.
Okay.
Okay, and
Yeah,
you
we'll
can
put
send
that
us.
in the
Yeah,
description.
put that. And you can see me on the street somehow.
Okay. Very good. Very good. Well,
Okay.
Janira, it's a pleasure. I really enjoy doing these, and you're
Yeah,
a
me
complete
too.
natural doing this
Me
stuff.
too.
So very good. Well, I hope to see you in future
Of
episodes.
course,
And,
of course, of course.
yeah,
Let
pleasure.
me know if there's anything that people are interested of, and I can do my best to put together the information.
You might open a can of worms there. I can tell you. Okay. Thank you very much. Thank you for watching and listening to the Wahin Today podcast. Don't forget to like, share, and subscribe. We're at Wahin Today Videos on YouTube and Wahin Today News on Facebook. We're also on Apple Podcasts and Spotify. Also, subscribe to our email newsletter at wahintoday.com/subscribe. There you'll get the latest news, info, and events in Wahin. And if you've got a guest suggestion or a topic you'd like us to cover, drop us a message or a comment. We'd like to hear from you. See you in the next one.